Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, as every weekend, I want to give you my weekly update on my real money portfolio. And today we talk about the week 5 of 2022. And oh man, what a week. I felt in the middle of the week just like that. But before we dive deeper into this very interesting, crazy week, subscribe to my channel, ring the notification bell to never miss another video, and then you will get full insight to my real money portfolio here on this channel every weekend. And if you like my work, if you like my analysis, if you find any value in that, then please support me. You can do that via PayPal under Investing for Generation. Thank you. Last week earnings season just continued, and a lot of my companies also published their earnings. And it started with PayPal. PayPal published their full year 2021 earnings. And when we take a look in the first view, this looks not that bad. Total payment volume went up, net revenues went up, operating cash flow and free cash flow went up, and also the non-GAAP EPS went up compared to 2020. So in the first look, you could say, wow, everything fine. But with this earnings of $1.11 in the fourth quarter of 2021, they missed the ZEX consensus estimate by 0.9%, not that much. Net revenues of $6.92 billion is a growth year over year of 13%. And with that, they surpasses the ZEX consensus estimates of $6.88 billion. Nothing wrong on that side. That's quite numbers in line, I would say. But notably, shares of the company plunged 16.6% in the pre-market trading due to less than expected fourth quarter 2020 earnings and even more weak guidance for first quarter 2022. So what happened there? When we look at the guidance for the first quarter in 2022, they expect earnings per share of around 87 cents compared to $1.22 in the prior year period. That's of course a big disappointment. And even worse, the non-GAAP earnings per diluted share to be in the range of $4.60 to $4.75 compared to $4.60 in the full year 2021. Or in other words, it looked like their earnings will be just stagnant. And that, of course, is a very weak outlook. And so the stock really slipped after they published this earnings, and currently is just down 28% since they published their earnings and is now at $126. It lost more than 50% from the peak of around $300. A few weeks ago, when I bought into PayPal, I made a full analysis and described why I bought at the time. And of course, the reasons just very obvious. PayPal is the biggest digital payment platform in the world, have a big market share. They still a free cash flow machine. Alone in 2021, they made $5.4 billion in free cash flow, which is an amazing sum of free cash flow. So still a very profitable company. And so overall, of course, PayPal is still a great business. But of course, as always, the question is, even if you have a great business, is the price correct? And in my analysis video a few weeks ago, I just made this intrinsic value calculation, and there you see already when we look at the estimated earnings for 2021, this was a little bit higher, and then of course it continues like that because I calculated with a growth rate for the next 5 years of 20%, and then for the years 6 to 10 of 15% with a terminal multiplier of 30, and then I came to an intrinsic value of $232. So even when I bought in around $170, it looked like PayPal is undervalued and way undervalued. But with this really disappointing guidance and outlook, it seems like I was too optimistic. So I tried to calculate again, and so I put in the earnings per share of $4.60 for 2021 and also $4.60 for 2022. That's the outlook. That's a lower range of the outlook. I changed the growth rate to 10% over the next 5 years and 8% to the years 6 to 10. And then we come to an intrinsic value of $129 per share, which is around the current price. And then you come to a discount rate of 10%, or an expected return of 10%. This is what you can expect over the long run as a return with a terminal multiplier of 25. So also here I lower it a little bit. So maybe my first calculation was too optimistic. I think I have to admit that. And maybe this calculation is too pessimistic. Maybe the reality is somewhere in the middle. The question is what to do now after this big drop, and maybe also with this change in the circumstances of the business. I thought about the last few days a lot. Everything just belongs to the growth rate in the future. But I decided after a few sleepless nights to hold PayPal, because on the current levels I think the chances are higher than the risks. So now I will just hold, because overall I think it's an overreaction by the market, and I will not sell into this panic sell-off. But this was not everything last week, because then the other day Facebook or Meta just published their earnings. Yeah, if you thought with PayPal this was bad, then Facebook just continued that. Because Facebook suffers 230 billion wipeout in biggest one-day US stock plunge. So kind of history, and yeah, good. I'm happy to be part of this history. Thank you. Meta earnings was $3.67 per share and missed the SEC consensus estimates by 2.91% and decreased 5.4% year over year. Revenues of $33.67 billion beat the SEC consensus estimate by 1.51%, but increased 19.9% year over year. Meta shares were down then 22% in after-hours trading after they published this earnings after the market close on February 3rd. So I would say these numbers for the Q4, a little bit like with PayPal, are not that bad, not that good, but this is not the reason for this big drop. So what happened there overall? When we look at the numbers, then we see that the net income was lower than in the Q4 2020. So there was a decrease, but overall, when we look at the trend, Meta is still able to rise the net income. So I would say no problem there. Of course, when you have a company with the size of Meta, then growth rates, of course, decline over time. That's just normal, but overall, this business and the net income is still growing. The same we see when we look at the family daily active people. And family don't stand for your family. Family stands for the Meta family of Facebook, WhatsApp, Instagram, and so on. And also here we see there's still growth, even if it's slower. But still, there are still 2.82 billion people active in the Meta family daily, I have to say. That's just an incredible number, I would say. And also Meta, or even more Meta, is an absolutely free cash flow machine. When we look at the free cash flow in 2021, then we see over the full year they made a free cash flow of $38 billion. Incredible. And next to that, they have cash and cash equivalents of $48 billion as of December 31st, 2021. And so when I look at all of these numbers, I would say Meta still is a great business, a really, really great business. The question is why the market react like that. And the reason the market react like that is because Meta, of course, have problems with growth, have problems with some headwinds, as the CFO say it in the outlook. And so they say on the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video surface like Reels, which monetize at lower rates than feed and stories. So the headwinds come there, and one of the big competitors there, of course, is TikTok. And on the pricing side, we expect growth to be negatively impacted by a few factors. First, we will lap a period in which Apple iOS changes were not in effect, and we anticipate modestly increasing ad targeting and measurement headwinds from platform and regulatory changes. So the changes with Apple iOS also hit very hard. They talk about around $10 billion there just because of these changes with Apple. Second, we will lap a period of strong demand in the prior year, and we are hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets, another headwind. And finally, based on current exchange rates, we expect foreign currencies to be a headwind to year-over-year growth. And therefore, the market let Meta drop. And since September, it dropped almost 38%, and then after they published the latest earnings, around 25%, and stay now at a market capitalization of $659 billion. So what to do then with Meta after this big drop? I also tried to calculate the intrinsic value here with Meta, and I used here the free cash flow. As you remember, the free cash flow for 2021 was $38 billion. So I put this in here, and then I use a growth rate of 10% over the next decade. This looks reasonable, not too high, not too low, with an expected return of 12% and a terminal multiplier of 20, which seems also reasonable to me. And when we put all of this together, then we come to a market capitalization or an intrinsic value of $921 billion. And remember, right now the market capitalization is only $659 billion. So for me, it seems like even with its conservative growth rates over the next decade, Meta is undervalued, way undervalued. I would say there is upside. There's a lot of upside with all the cash in hand. But of course also because Meta is a front runner at the metaverse. So who knows what happened there? They put a lot of money into that, and my fantasy is never enough to imagine how big this market really is or can be. It could be the next big thing. I don't want to bet on that, but even without metaverse, all of these numbers look very good for me for Facebook, and I think the market reaction is way too pessimistic. I'm still optimistic and positive for Meta. Also, Allstate reported their quarterly earnings, and Allstate quarterly earnings of $2.75 per share, beating the SEC consensus estimate of $2.74 per share, so almost in line. And the revenues of $12.75 billion for the quarter ended December 2021, surpassing the SEC consensus estimates by 15.8%. So everything fine on the business side here for Allstate, and so I just will stick with my position. And then also MI Homes reported their quarterly earnings, and MI Homes have records all over the place. And also the shareholders' equity reached an all-time record of $1.6 billion, a 29% increase from a year ago, with a book value per share of $57. And by the way, also $236 million in cash. This also is a record. And so overall, on the business side of things for MI Homes, everything is fine. Of course, in the future, they could have problems with the rising interest rates and the impact of in the housing market, of course. But overall, this is a very, very healthy business. Then let's take a look at my transactions of last week. And I added to some of my positions, and after all what I said so far in this video, it can't be a surprise. I added 2 MI homes. I bought yesterday 17 more shares for $49.87, and I own now 190 shares of MI homes with an average purchase price of $60.34, and I'm down with the whole position 17.6%. So why I added, as I said before, the book value per share is $57. The current stock price is under $50, and so MI Homes is way under book value, and so it seems to me it's an absolutely bargain. Because, as Peter Lynch said, when stocks are attractive, you buy them. Sure, they can go lower. I've bought stocks at $12 that went to $2, but then they later went to $30. You just don't know when you can find the bottom. And so, as always here on the channel, you just can look at the business side of things, at the fundamentals, and then if you find something where the business is really, really good and it looked way undervalued, then lower prices are a great chance just to buy more of great businesses. And for me, it looked like this is what happened to MI Homes right now. And so I use the chance to add to this great business. And then, of course, I would say I also added to Meta. I bought on February 3rd 7 more shares for $238.98, and so now I own 51 shares of Facebook or Meta with an average purchase price of $287.73, and I'm down with the whole position 12.63%. Then last week I also received dividends, and I received $25.50 from JP Morgan Chase, the big US bank. With that, take an overview over my current portfolio. And first start with a pie of my portfolio, and then you see Facebook or Meta is still the biggest position in my portfolio with 6.81%, followed by MI Homes, Intel, Tencent, Bank of Nova Scotia, and so on. You can look for all of these businesses. And by the way, if you're new to my channel, you find deeper analyses to all of these businesses on my channel. Feel free to check this out. Then take a look at the performance of every single stock and just start with the performance in this very interesting 2022 so far. And here we see this picture is very indifferent. The Chinese stocks, Baidu, Tencent, even Alibaba are up in 2022. Also the very conservative businesses, the insurances like Progressive, Allstate are up. Then on the downside, of course, now there is PayPal and Facebook, also MI Homes. And so this picture is very indifferent. And then also take a look at the performance of every single stock since I started this portfolio as the 2nd of December 2019, or since the stocks are in my portfolio. And then you see that the Bank of Nova Scotia or Scotiabank are the best performing stock with 97% up, followed by Coca-Cola, JP Morgan, Berkshire Hathaway, and so on. And overall, of course, biggest loser are Alibaba, now then PayPal, and MI Homes. That's the overview over the performance overall in this portfolio. And as I said before, you find deeper analyses to all of these companies where I describe when I bought and why I bought. Feel free to check this out, and hopefully you find any value in that. And just to make this round and give you an understanding how I come to my performance overall, here are also the closed trades since I started this portfolio as the 2nd of December 2019, and there you see I had some really good trades with Imperial Oil, Caterpillar, Walt Disney, and so on. And with that, just take a look at the performance. And also here, take a look first of the performance in this new year 2022. This is a very interesting year 2022, and of course last week my portfolio got a real big hit, and so now my portfolio in 2022 is down 5.53%, which is in line with the S&P 500 and underperformance to the Dow Jones Industrial Average. And when we look overall at the performance since the start as the 2nd of December 2019, then of course my outperformance to the S&P 500 also decreased, and now I just have an outperformance to the S&P 500 of around 7%, and the overall performance since I started this portfolio of 51.42%. So also even after this big hit last week with PayPal, with Meta, still overall in the longer view, still a very good performance. And sometimes you just have to zoom out when something like this happened and really was kind of a disaster last week. So that's it for today. Thanks for watching. If you liked the video, give me a big thumbs up, subscribe to the channel, you help this little channel a lot with that. And if you appreciate my work here on this channel, and if you find any value in that, then you can also support me via PayPal, Investing for Generation. Thank you for that. And then we will see the next time, I think on Wednesday, with another analysis of another business. See you then. Take care. Bye bye.